Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is a short instruction video for my trade calculator. So for any trade I'm going to take, I always like to mark it on my chart, but you can certainly just make notes on a piece of paper or whatever. I just like to put it on my chart so it's really visual in front of me. So here's a trade that I've actually taken. This is VALE. This is a mining company. And on any trade, when I'm analyzing it, I use Elliott Wave and Dow theory and the applied reality trading tools to analyze charts. And just what am I thinking on this chart? It's been in a long downtrend. It started way off this chart. It's come down really dramatically. It put in a really clear what's called a fry pan bottom here, and there's every indication that it's going to retrace. It's going to have a corrective Elliott wave up into a Fibonacci zone. It doesn't have anything to do with the calculator. I'm just telling you why I'm taking this trade. And that retracement zone is somewhere between 478 and 645. And so what you do need for the calculator, though, is an entry price. And I set my entry price here at 278. I'm actually already in this. But I'll show you how you can use the calculator before you get in, or if there's a new price here now. So I have an entry price and I have a stop price. Those are the essential values. It's also nice to have a target price. And I've got my target price set very conservatively at 480. It could go much higher, but I'm always going to base my decision on a more conservative outlook, that if it hits the minimum target, is that still a worthwhile trade for me? So I've got an entry price, a stop price, and a target price. This is a long trade. I'll also demonstrate on a short trade as well. So this is the calculator. It's simply an Excel spreadsheet that I've plugged the formulas into and done some formatting here to make it look nice, but nothing magic about it. It's just an Excel spreadsheet. What's magic is the formulas and the power for those formulas in helping be consistent and profitable in trading. So let's go ahead and put the values in for that trade that I showed you for the VALE trade. So I said my initial entry when I was first looking at that was 278, so let's put that in, 2.78. We'll see what the values were initially. Stop price, that's critical, 213, so 2.13. And my target price was 480, still is, 480, plugging that in. Now, this is the percent risk that I'm using. If you've seen the video on risk management, this means I'm not willing to lose more than 2% of my account on any given trade. Now, if you want to change this, you can. You can put in a different level there. There's 3% or whatever. I really like 2%. That's worked well. And then this is the account size, $50,000. And you can change this, whatever your account size is or more, right? Works on, oops, that's 10,000. So it works on any account size. I'm going to go back to 50. So what this is doing, I've got my entry price, my stop price, my target price, my risk level, my risk percent level, and my account size. And now it's telling me, and these are the only cells that you need to put data into. The rest are just output. They're just the formulas working. If you want to know the formulas, they're up here in the formula bar. Again, nothing hidden, nothing magic. But this is telling me that at those levels, it's telling me that to follow the 2% risk guideline so that I would not lose more than 2%, it says buy 1,538 shares. And that is going to cost me 42.75. So my risk percent is different from this, the cost of the position or the cost of the shares. But it's saying if it goes down and hits this stop, if I buy it at 278, and it goes down and hits 213 and the trade fails, it's a loser, I'm going to lose, and I'm rounding down, 999.70, just under $1,000. $1,000 is 2% of 50,000. So it's saying, it's telling me the position size based on those inputs to take and to limit my loss to 2%. Now current price is above that entry. The current price is up at 332. So now the number of shares I would buy would go down because the distance between the stop and the entry is greater. So it's saying in this case only buy 840 shares, and that's less. You also may have noticed this cell that turned from green to yellow. I'm showing the reward to risk ratio for this trade. It's simply how much money would I make if it hits my target versus how much money will I lose if the trade fails. And it's saying, in this case, my reward to risk ratio is 1.24. So if I am right and it goes up and hits my target and I get in at this price, I will make 1.24 times more than I'll lose. And you can say the potential to lose here is, $1,000, so the potential to gain here is about $1,240, rounding a little bit. So back at my initial entry, my initial target or entry price, which was 278, I had a 3.1 reward to risk ratio. I had the chance to make 3 times as much money as I would lose. So obviously a better trade back at my initial entry price. But that's how you use and I have the value set here. Anything less than actually 1.19 red. I don't like taking trades where I have the chance to lose about the same amount as I have to win. I want to have a potential to win more, much more. The more the better. Okay, let's take a look at a short entry. So I always start with the chart, and I got my chart marked up just like I talked about on the last one. This is a SNDK, SanDisk Corporation, and this is a short trade. I have a bearish analysis. You really can't see the rest of it off the screen, but this is what's called an Elliott Wave 5. It's a downtrend continuation trade if you're interested. But I've got my entry price, and notice I'm not at the entry price yet. It's this blue line. I'm waiting for it to come down and confirm my entry, but my entry is at 65.94. My stop is up here at 78.84, and my target price is 40.15. So let's plug that into the calculator. So here's the calculator, and again over here is the short position. The formulas are backward from a long position. So let me type in my entry is 65.94. My stop price is 78.84. And my target price is 40.15. There we go. So this is telling me for a $50,000 account with a 2% risk that I would go sell 77 shares, and that's going to cost me $5,077. And if I'm wrong, if it goes up and stops me out, I'm going to lose just under $1,000, $993.30. Again, 2%. The reward to risk ratio on this one is 2.0 to 1. So if I am right, I'll win $2,000, and if I'm wrong, I'll lose $1,000. The key to profitability for me is having a good win ratio, at least over 50%, and a good payout ratio, which means my average winners are bigger than my average losers. The amount I win on the trades I win is more than the amount I lose on the trades I lose. Okay. If you saw my video on risk management, I cover that in more detail. But this is just some quick instructions on how to use the calculator. If you have any questions, please feel free to email me at dean@followmetrades.com. Thanks.